Today's discussion centers around a fascinating ETF, the Occurrence Active Hedge U.S. Equity ETF, also known as XVOL. It promises S&P 500 returns with a built-in hedge against market volatility. Intriguing, isn't it?
Absolutely. The core idea is to participate in the upside potential of the U.S. large cap equity market while mitigating downside risk through a sophisticated volatility strategy.
So it's not just about tracking the S&P 500, it's about actively managing risk. How does that work in practice?
Precisely. XVOL employs a proprietary algorithm to dynamically adjust its VIX options positions. This allows the fund to adapt to changing market conditions and potentially reduce losses during periods of heightened volatility.
Dynamically adjusting VIX options positions sounds complex. Can you elaborate on the strategy behind that?
The fund invests in dividend-paying companies and growth stocks, aiming for a strategic blend. The key differentiator is the overlay of VIX options. The algorithm determines the number, strike price, and expiration date of these options based on its volatility assessment.
So the algorithm is the brains of the operation, constantly evaluating market conditions and adjusting the hedge accordingly. What kind of performance has this approach yielded?
Past performance, as always, is not indicative of future results, but the fund has shown some interesting trends. For example, as of December 31st, 2024, the fund had a 30-day SEC yield of 1.71%. Its year-to-date return was a healthy 20%.
A 20% YTD return is certainly noteworthy, but how does that compare to a benchmark like the S&P 500?
The S&P 500 over the same period showed a 25.02% return. While XVOL lagged slightly, it's important to remember the built-in volatility hedge. In turbulent markets, that hedge could prove invaluable. The fund's 3-year annualized return was 3.75% NAV compared to the S&P 500's 11.41% over the same period, right?
Let's delve into some specifics. What's the expense ratio and what are some of the top holdings?
The expense ratio is 9.83%. As for top holdings, as of January 29th, 2025, the fund's top positions included Broadcom Inc., AVGO, Heritage Financial Corp., HFWA, and KeyCorp, Key, among others. A significant portion of the portfolio is allocated to financial and technology sectors. Interestingly, the fund also holds VIX options contracts, reflecting its volatility management strategy.
The inclusion of VIX options is a key element of the fund's strategy. How does the fund's management team justify this approach?
The fund strategy is based on the belief that actively managing volatility can lead to better risk-adjusted returns over the long term. By using VIX options, the fund aims to reduce the impact of market downturns while still participating in the upside. This is a departure from passively tracking an index.
I see. So it's a more active, risk-managed approach compared to a simple S&P 500 tracker. What are the potential benefits and drawbacks of this strategy?
The potential benefit is reduced volatility and potentially better risk-adjusted returns. However, the active management comes with an expense ratio and the possibility of underperforming the market in strongly bullish periods. The fund's performance will depend on the effectiveness of its volatility hedging strategy.
That's a crucial point. Investors need to understand the trade-offs involved. How can investors access this ETF?
XVOL is available through various channels, including phone, broker-dealers, investment advisors, and other financial services firms.
So accessibility shouldn't be a major hurdle. What are your final thoughts on XVOL?
XVOL presents a compelling alternative for investors seeking exposure to the U.S. large-cap equity market with a built-in volatility hedge. However, it's crucial to carefully consider the fund's expense ratio, active management style, and the potential for underperformance in strongly bullish markets. It's not a one-size-fits-all solution. Yeah.
Excellent points. Understanding the nuances of this actively managed ETF is key for potential investors. Thank you for this discussion.